Hello guys, I'm back here again with another one. So, in this video I want to share a snippet session with one of my students discussing advanced market structure. Do well to learn backtest. Like, share and subscribe.
you know, and you can see what is happening over here. Uh, this the market is just selling. There's no information on the monthly time frame. Okay,
Yeah.
can you hear me? There's
Yes.
no information to talk about on the monthly time frame. You get so. I'm just going to what I'm going to do here. You know, I believe. Can you hear me?
Yes.
Okay. So basically, what we have over here. Look at this. The market is selling. Yeah, it has been selling from where? From up all this while. You can see just downtrend, selling impulsively, selling impulsively. Yeah. So and it's selling now also. What do we want to do? We want to just follow what the market is doing and sell.
Where must you go to the
You
monthly
see?
time frame?
You see, there's
Is
a lot
that
of information also. There's
okay?
information. You see, it's because we are even trading synthetic indices. But trust me, assuming it's currency pairs they are trading, you have to go to the monthly time frame. Because
Okay.
see, you should understand how let me explain this to you. You know, it's like how will I explain this? Well, I need to use something that will really turn this up. Okay, have you heard of programming,
Yeah.
computer
On PC.
programming?
Yes.
So let's say you're writing a code, maybe on Python. It's a computer program. You get, you know, if you make an error, just put in one letter, that program is going to show error or it's going to show you what you don't want.
Yeah. Yes.
It won't
Yes.
work. So similarly to this trading also, you see, let me give you an example on the chart. The problem is the monthly time frame, Kingsley, might be in a supply zone, or maybe it might tap into a fair value gap in the monthly time frame. If you don't go to the monthly time frame and you stick only to the weekly time frame, you might not really see that fair value gap, or you might not really see that supply zone as it's meant to be. And so, what is going to happen? You are on the weekly time frame. Generally, you're already stuck to a buying idea. Your idea from the weekly time frame is just to be buying. It's just to be buying. And meanwhile, on the monthly time frame, we are in that zone that can possibly sell. You know, I don't know whether you get the idea.
Yes. So you're just buying the retracement.
Yes. So the problem is now, if you are only on the weekly time frame, if you even see a change of character, that is a break of market structure. If you don't know what is going on the monthly time frame, you can just call this break of structure zone. You just call it liquidity, and you want to buy from somewhere here. You know. Meanwhile, you don't
Yeah.
know that on the monthly time frame we have tapped into that zone that can possibly start selling. And you come and buy over here and the market to sell.
Hmm.
You know, that is the importance of higher. You need to really, really consult the higher time frame. You know, it's just like maybe you wanted to buy, like somebody who was on the lower time frame and he has been trying to buy this candy, not knowing that the market has moved into this. You know, and the market started selling on him. So you just the thing is, you know, there is not much stress. You have to take it easy. You just go to the monthly time frame. You know, it doesn't hurt so much. At
Yeah.
least you want to have a general overview of what the market is doing. You know, there are models I'm going to share with you that you don't even need to go to the monthly time frame. There are models that you just be okay with only the daily time frame. Then maybe the weekly time frame you choose. But all you just care for those models is just what the daily time frame is doing. You get
Okay.
so
Yeah.
that is it. So look at what is happening over here. The market is what selling. Is there anything you want to do? There's not much information over here. You get, but you can just draw a line over here. over here, that is from the where the monthly candle cap started selling. Can you see that? There's no much data on stock index, so maybe I won't want to discuss about this. Let's just leave it. The stock index data is not so much, you know. So just much for you to do. So we now go to the weekly time frame. You know, also on the weekly time frame, what do we have? You can't do much. Also,
Yeah.
there's no much information. All you are just seeing is just what red candles, candles that are selling. No much information again. The only information you've had from the past is the market tapped into this zone, this fair value gap. Can you see that?
Yeah.
The market started selling. That's the only information you have. But all you just know is that the market is selling. So nothing to mark here also. Yet you can just decide to mark this at least for the sake of backing, but there's nothing much to do, right?
Other block.
So you go to the daily time frame. On the daily time frame, look at what we have. Things are now more clean. Can you see this?
Yeah.
So that big order block we marked on the weekly time frame, look over here. It created a zone that caused this impulsive movement. The market, you know, was selling, moved up, tried to buy for some days over here, and what happened? Boom. The market sold and broke structure.
Yeah.
And you can see this break of structure was impulsive. This zone, there's something about it. This zone speaks what we call volumes. You get this impulsive candle movement is not for fashion. This means that there's something that really made this market sell from here. So whenever you're doing top-down analysis, you have to watch what the candles are doing. You have to watch the nature of the candles movement. Look at this. Can we call this impulsive candle movements?
Yes, that's impulsive. Yeah.
It's impulsive. You
They're
can see
bigger.
all their red, fully red.
Yes,
Right?
big.
So look at what we have over here. The market, after breaking this structure, the market retraced a little bit and then started selling. Right? And then the market retraced. You know, when that retracement happened, this market moved, broke this zone, and then sold impulsively again. Okay? So I'm going somewhere. The first information, or let me say the first big information you have for today in today's class. This is the first big information you're having in today's class, Kingsley. This is a high probability zone to take a trade from, this place. Do you know why?
It's another block.
Hmm?
Another block, double top, another block.
Not really. Let me explain. So I don't know whether you have a pen and paper with you as you're watching
Yes.
this class, because you have
Yes.
to write some things down.
Yes.
Like what
I
I'm
have
about to tell you, you have to write it down. Okay.
Yes.
Now look at this left. Look at the left side of this chart. Can you see it?
Mm-hmm.
What do we have over here? An imbalance. Let me explain what an imbalance is. I believe you know, but let me just brush over it. You
Fair
know,
value gap.
it's a 3-candle pattern. You know, or let me say 3-candle formation that has displacement, and the 2 wicks do not overlap each other. That is, there's a space between the 2 opposite wicks.
Yeah. Fair value gap, Abi.
That is an imbalance. Yes, fair value gap. Yes,
Yeah.
fair value gap. You know, so that is just it. I believe you know what a fair value gap is, or should I expatiate
Yes.
more?
Yes, I know. No, it's okay. Continue. I know what it is.
So look at what we have over here. The market tapped into what? This is a fair value gap.
Yeah. Yes. Yes.
Let
Yes.
me
I've
mark.
seen it.
Let me just mark it.
Yeah.
Okay.
Exactly. Yes. Yes.
So this information is fractal, or let me say this kind of thing that just happened over here is fractal. What I mean by fractal is it can work on any time frame. If you are doing a top-down analysis and you should come across this scenario, that is the market, the scenario, let me explain the scenario. That is the market was selling, then it retraced, started selling again, and then moved up, broke this high, which caused the recent sell, broke it, and then sold impulsively, breaking the entire low. Whenever you see this, you should know this zone is a high probability zone to take a trade from. Are you with me?
Yeah.
Whenever this kind of stuff happens, just know it's a high probability setup. Let me just do a quick this thing. Let me do this over here. So the idea is, let's say the market is selling, right? Fair value gap. This is your fair value gap, right? The fair value gap. Then the market retraced, did something like this, and then came back, swept this high over here, and then this zone that you can see over here, it's a high probability setup. I don't know whether I was me.
Yes.
So I just want you to keep this in mind, With time, you just have to backtest, but these are kind of things that you just have to keep a record. Because when you are doing your top-down analysis and you see something like this, as far as it's in line with market structure, just know whenever you see this thing, it's something that is high probability. Most of the time, if you mark this kind of zone and it fails, then just know, it's trading. After all, we are not perfect, But this kind of things, it's a very, very high probability setup. So the idea I just want you to get is, what did the market do? The market was going in a downtrend, broke the structure, moved up small, to fill in the zone, started moving, but could not move down fully, then moved up, broke this structure that started causing the sell, and then moved impulsively down, breaking the entire structure. This is a high probability zone for you to take a trade. And the other day I was explaining something to one of my students. Let me just go to the H4 time frame to see if I can explain this better also. Look at what we have over here. Let me delete this. We can call this a short-term high. Right?
Yeah.
Don't get confused. I'm explaining, okay? This is a short-term high. Then this, we're going to call this intermediary term high. Okay? Then the next move you are expecting, that is going to bring a sell to you, is another short-term high that's going to form. It's going to move down. So basically, the idea I just want you to get over here, just think of a head and shoulder pattern. Don't get confused. Can you see this?
Okay. Head and shoulder.
The head and shoulder pattern. Yes. So that you don't have to just get too confused about it. Whenever you see, as we're doing top-down analysis, let's say now, the time the market was over here, let's say the market did not form all these candles over here. Let's say the market was still here. What I would have anticipated over here is, okay, this zone is a high probability setup. First, why? It's broke structure. Secondly, there is a possibility of it forming a head and shoulder pattern. Okay.
Yeah.
So the reason I explained using this head and shoulder pattern, I know it's going to be easier for you to spot. Because although all the grammar of that, short term, low, and intermediary, what, is going to be a little bit complicated sometimes, But this is a simple approach. Just think of a head and shoulder pattern. Whenever you see the head and shoulder pattern, two things will just come to your mind immediately when you're expecting maybe a shoulder to form over here. What you just do, your attention should go to the left side of the chart. You just look here. That is this head of the shoulder is the move coming from an imbalance. Okay? Did that move come from an imbalance? If yes, then what? Shoulder. Is your high probability right shoulder that wants to sell? Okay? So this is just the basic way I want to explain it so that you will not get confused. Just think of head and shoulder pattern. We are doing a top-down analysis, and from the weekly time frame, what was happening? Nothing much except this other block, right?
Yes.
So we now move to the daily time frame. And we are now looking for zones to mark inside all these other blocks that we can see. And we now saw and looked at the zone that has the most recent impulsive candle movement, which was this. Right? This was the zone that caused at least the most recent consecutive 3 candles which were impulsive. Look at this. And yes, you would have wanted to match here, saying it's a high probability setup. But what makes it more high probability? It's a high probability setup because why? This is the left shoulder. This is the head. And you're expecting that the market is coming here. It might give you a possible right shoulder setup. And what makes it even more high probability setup? Look at the left side of your chart. Did it tap into an imbalance? Yes. This is a high probability setup. Some people call this the silver bullet. So that is it. Don't get confused. This is not the only way to analyze the market. But these are things that happen. They happen repeatedly on the chart. If you do a top-down analysis, at least some couple of times, maybe in a week or 2 weeks, you see this thing on the H1 or H4 time frame. You'll be seeing them forming. You get
H4 and
so that's the
H1.
basic idea.
Yes,
H4. You'll be seeing them.
H1. Okay.
Yes. You'll be seeing them sometimes. So if you see them, you want to take advantage of them. It's a high probability something. So all you have to do, don't get confused. Once you are just doing the analysis, as far as this zone broke structure, if it breaks structure and you can see a little bit of a high, which is the left shoulder, then this is the head. You can just expect a right shoulder to come and the market starts selling from there. And I told you just look at the left side of the chart. Did the head tap into a fair value gap? If yes, it's a high probability setup. All right?
Yeah.
Do you have any question?
No, I'm catching up. I'm following very well.
Okay. So that's all right. So let's go to the H4 time frame to refine this zone better. On the H4 time frame, this is what we have. So normally now we are just going to forget everything we have mostly. That is this other block that we have on the weekly time frame. We are going to delete it and we are going to concentrate on the recent thing that has been happening. That is where we want to care about. And the recent thing that we care about is here. Right? Now we can just go to the H4 time frame to refine the zone. So this refine this zone by Are you with me?
Yes, I am.
So, this is the daily time frame and this is the other block you have.
Yeah.
But it's too big. So you can just refine it in the H4 time frame. You said?
Yes, yeah.
Sorry, I can't hear you.
No, can I say continue? I'm okay. I'm good.
Okay. So I said, this zone, you now want to refine it a little bit. Now you can agree with me, this entire green canvas is one other block on the higher time frame.
Yes.
This entire green. You can just go to the daily time frame, you find out. Let's just mark it. On the daily time frame, look at what we have. You can see it's just this green candle over here
Yeah.
on the daily time frame,
Yes.
right?
Yeah.
So on the H4 time frame now, you can just refine it a little bit, at least just to 50% of the zone, so that the zone will not be too big. And this is your setup at the moment, And looking at the general idea of what is happening, we are going to discuss liquidity also as a separate topic. But what wants to happen over here is liquidity also. Look at this. We call this trend line liquidity.
Yeah.
Okay.
Yeah.
So now, basically, what happens in this scenario is, the market is going to break this zone. Most possibly, the market is going to break this zone, then move into this our zone in an uptrending fashion. And normally, when this zone breaks, people will start buying from here.
Yeah.
Then this is going to be a long-term buy. This is going to be a long-term buy. The market wants to start buying. The selling has finished. You get. Unfortunately, most of the time, the selling has not finished. The market is only doing some moves, to just make people off board. And when the market taps into this zone, you might have something like this also. Can you see this?
Yes.
I just want you to notice what I'm drawing. Can you see this?
Yeah. Yes.
What do you have over here?
Head and shoulder coming up.
Yes.
Left shoulder.
Yes. So you can expect a right shoulder to come over here and you sell from. This is another confirmation entry. So the idea I want you to get over here is the highest confirmation entry you can get, is this kind of formation over here. The one that is going to leave this left shoulder, the head, which possibly tap into a fair value gap on the left side, and you expect the market to come back and you sell from there.
Yeah.
Okay. And these kind of things, Kingsley, they don't only form here.
That is the basic idea with what I have for you guys. So this is the basic way of how I run my mentorship service. Basically, the way I run my mentorship service, we have some couple of classes with my students. Each class is 1 hour. The class is not one, not two, not three, not four, not five, is more than that. All right. So if you want to make inquiries with regards to the nature of mentorship service I offer, you can check the pinned comment in this video. Just check the comment section, you see the pinned comment, you see a link which is going to guide you to my WhatsApp so that you can make inquiries about the mentorship service. So that is the basic idea with what I have for you in this video, guys. Have a good one.